Good morning, everyone. Can we give another standing round of applause to Madam Schultz? Power, people, progress, possibility, purpose. That is what I'm taking home. What an inspiration. If we can't go to the people's levels where it matters, it does not matter at all. That is the message. Well done, Queen. You are such a queen of words. Thank you so much. I want to tell you a little Namibian story this morning. A story that we had uncovered by piercing not numbers, but the proverbial financial inclusion veil, and a story that opened our eyes to the realities experienced by far too many Namibians. In 2021, whilst we were evaluating Namibia's financial sector design and objectives, we uncovered what the statistics alone could never tell us. We found people, hard-working men and women, striving every day to better their lives, yet living just beyond the reach of the financial system. They were hidden in the proverbial plain sight. One of them was Chuma, a small-scale farmer from the Zambian region, Zambezi, and she had been growing maize and raising cattle for 2 decades, trying to provide for her family's needs every day. Yet, she never owned a bank account. When drought struck her community, and indeed Namibia had the worst drought in history for the past couple of years until the rainfall in this year. When that drought struck Shuma's community, she had no safety net, no access to credit, no insurance, no mobile wallet to receive emergency drought support, and to our financial system, she was completely invisible, out of reach, completely left out, completely left behind. Yet, despite her resilience, despite the vital role she was playing in her community, in her family, to provide in their daily needs, she was unseen. And here's the hard truth that we all uncovered when we truly did our work. Chuma's story wasn't a unique story. Across Namibia, we discovered that our financial system, very sophisticated, very stable, very sound, very profitable, were failing far too many Namibians. It was not inclusive, and that's the truth that we cannot hide. It was not designed for people like Shuma, or for the young entrepreneur in Katutura trying to code his first app, or for the informal trader in northern Namibia, in Oshakati, juggling small margins, or even the learners in rural Namibia, who through the Bank of Namibia's Science, Technology, Education, Arts and Mathematics program have shown remarkable ingenuity by developing tech-based solutions for real community challenges that they were trying to solve. These young innovators have created food safety detection tools, rhino tracking devices to combat poaching, air quality monitoring systems to address pollution, and water purification technologies. One young girl from a small, tiny village of less than 200 people down south in Namibia where it snows, even developed a mobile application to help her community to stay warm and inside when it gets very, very cold, because people were dying and she was trying to solve. And that realization forced us as the Bank of Namibia to confront the question that redefined our entire mission. What if we could engineer a financial system that worked for everyone, wherever and wherever, where people like Shuma were not an afterthought, but the very reason that financial system existed. The story of Namibia and how we are trying to reimagine our financial system is not one about money. It's not a passive machine that manages money. Truly, it is an active catalyst for inclusive growth. What I want to share with you today is a story of how we were building a financial system that is inclusive by design, where its DNA, it's all about inclusion. A system whose primary objective is to ensure that everyone is included, and you've heard us saying this the whole time whilst we speak. A system that includes everyone and leaves no one behind. So you've heard and listened to the video yesterday, and you saw everything we've done. What I want to share with you is how we did it, if you would allow me to share that with you. So when we completed our independent evaluation of Namibia's financial sector strategy 2011 to 2021, the results were sobering. It was very, very depressive. Yes, we had achieved macroeconomic stability. Our financial sector was stable, sound, well-regulated by a first world-class regulatory instrument. But behind these successes lay an uncomfortable truth, in that we had perpetuated a system that reflected and reinforced the inequalities of Namibia's past. The numbers told a very stark story. Despite 3 decades of independence and growth, significant portions of 40.7% of the rural population in Namibia remained excluded. Our informal economy completely excluded. Our youth unemployment remained painfully high at 37.3%, locking young Namibians out of the opportunity to access capital, to start a business or to study further. Rural communities, in particularly women, were still traveling on average 2 to 3 hours to reach the nearest bank. And as you've heard Mashul say, just to be told, we cannot assist you. You don't have the right consent, you don't have the right documents. But the real wake-up call came not from the statistics, but from listening. Mashul said, listen. Together with industry partners and development organizations, the Bank of Namibia conducted comprehensive consultations across our 14 regions. We sat on wooden chairs under trees in rural homesteads with farmers. We gathered with our nomadic tribes wherever they were finding themselves. We stood in crowded markets in the capital city and spoke to traders. We listened to young people from Swakopmund to Rundu, to Katima, to Konene, to Karasburg, who had brilliant ideas but no access to startup capital. And what emerged from these consultations indeed was truly profound. People were not asking for handouts, no free rides. They were not interested in anything free. They were asking us for opportunity. They wanted to save, they wanted to invest, they wanted to protect their families, they wanted to grow their business. They had the drive, they had the innovation, they had the entrepreneurial spirit, but what they lacked was a financial system willing to serve them. Meanwhile, the world was shifting under our feet. Climate change was scourging and ravaging crops across Namibia. Digital transformation was disrupting everything and everything we know. Cyber threats loomed about almost every transaction that was done on our digital platforms. And the COVID-19 pandemic has exposed with brutal clarity just how vulnerable the excluded truly are when crisis hits. We realized then that our financial sector could no longer afford to stand on the sidelines of everything that was happening. It had to be more than just a mere guardian of stability. It had to be an engine of empowerment and growth. People, purpose, progress, possibilities. All of the 5 Ps that we've heard today. And so, as the Bank of Namibia, with all our stakeholders, we reframed the challenge. In a nation of less than 3 million people, we couldn't afford to leave anybody behind. Our president says we are too small to be poor or to allow poverty to persist in our country. Every unbanked farmer, in our view and understanding, represents untapped productivity. Every informal trader denied credit represents unrealized growth. Every young person locked out of the financial system represents opportunity in innovation forever lost. Am I right or am I right? Thank you. Thank you. Our conclusion was clear. Inclusion could never be a tick box, never a box to tick. It had to become the DNA of our financial system, woven into its very, very fabric. Not an add-on, not a corporate social responsibility line item, but the organizing principle itself. That is the vision that sparked Namibia's journey to build that financial system that is inclusive by design, where Shumwe, or a San woman from Chunkwe, so sorry for the terminology, but the San people in Namibia traditionally was referred to as the Bushman people, a nomadic tribe within Namibia. So where the San person from Chunkwe, the Code in Katatura, the trader in Oshakati, the young innovators in rural Namibia, innovating to resolve the community challenges facing them every day. They are no longer just bystanders. They are no longer just afterthoughts. They are active participants in the financial system. They are empowered, and they are agents of the growth that we wanted to see as Namibia. So turning vision into reality requires more than just good intentions and policies. It requires bold courage to reimagine the foundations of finance itself. In July 2025, we launched the Namibian Financial Sector Transformation Strategy 2025 to 2035, and our governor referred to that, our Minister of Finance referred to that. Not as another policy document, but as a living blueprint for disrupting what we had and imagining an impactful transformation going forward, where we include, where we calculate, we leave no one behind, we are deliberate in our approach. That strategy rests on 5 critical pillars, each designed to reinforce the other, to enable a truly inclusive, evolving ecosystem. First, we are focusing on broadening our financial markets to ensure that capital flows where capital is needed, not only to the large corporates in Namibia, but to the small trader, to the coder with an innovative idea, to the farmer that needs to build resilience to withstand climate change. We're driving digital transformation and innovation, recognizing that technology, when used responsibly, is the greatest equalizer that can carry financial services to the most remote part of Namibia. Thirdly, we are prioritizing financial access, literacy, and consumer protection because inclusion without protection and empowerment still leaves people very vulnerable. Fourthly, we are focusing on financial sector localization, building homegrown capacity and expertise so that Namibians themselves can lead and own this transformation. Fifthly, we are investing in the skills and human capital of our people because we know that sustainable transformation depends on people equipped to navigate both the technical complexities and the human dimensions of inclusive finance. It's all about the people. It's all about empowering them. But here truly is what made our approach quite different. We didn't develop this strategy in isolation. We brought together ministries, regulators, civil society, organizations, private sector players, and most importantly, the communities we serve as the Bank of Namibia, as NAMFISA. We held those consultations, and our teams came back with the most beautiful stories, pictures of how they sat under trees, pictures of how they were in cattle kraals, engaging the farmers. We listened in Oshivambo, in Ochiherero, in Rukangwali, in Kubukawap, in German, in English, in Damaranama, all the languages in Namibia. We made sure that the voices of those who had been excluded for so long were central to designing their own inclusion, not our inclusion, their inclusion. One of the most groundbreaking initiatives was truly what we've done around microfinance banking, because for far too long, the small entrepreneurs were left out. And we also relooked our capital requirements to enable microfinance banking, agent banking to happen in Namibia. And also, if you look at what we used to ask for capital requirements, it used to be millions of dollars. But if you're interested in microfinance and even branchless banking, it came down to up to 7.5 million Namibian dollars. Divide it by 8 and you'll know what it is in 18, and you'll know what it is in US dollars. What we've also done, we revitalized the e-money framework. You heard about it yesterday. You also heard how we truly rethought our entire regulatory practices. We moved away from thinking that it must tick the world-class boxes, and we thought about enablement, and truly thought about our regulations being smart in its very existence. Why do we say smart? Not smart because we need less regulation, no. Smart that the very laws, the very policies, the very implementation frameworks do not further exclude our people, but include them. So to further access savings and lending products for the excluded communities and deepen our financial inclusion efforts, we also have comprehensively reviewed any other framework available that could help us to further the financial inclusion journeys, to enable a broader range of financial products, services, credit insurance to reach our people. And as you've heard yesterday, a mobile phone no longer is just a communication tool. It's truly banking in the hand of our people. We also, to further nurture this innovation, build an innovation hub, but not the kind that you fill with beanbags and laptops. Oh no, we didn't do that. We built an innovation hub for our people that carries a philosophy and belief that inclusion and innovation must grow together. We've built a fintech regulatory sandbox and it's complementing regulatory navigation chatbot that helps anybody that wants to open up financial services in Namibia, be they a bank, be they a fintech, to literally understand by engaging our chatbots, what are your licensing requirements? What are the do's and don'ts? What are your capital requirements? What other complementing frameworks and policies must I have to be fully licensed by the Bank of Namibia? So by just going onto our website or any of our pages, our social media pages, they can understand what is required. We also realize that technology cannot just be technology for technology's sake, but technology must empower and must help us to solve real problems and build trust. One problem we had was customer complaints, and today you saw the video of how we are trying to have an AI-led customer complaints. Fraud is another big challenge that really is carving down on trust our people have in the financial system. And again, we realize if a fraud detection tool is not AI-enabled to timelessly pick up, to stop, to disrupt, we are not winning the game. So we are busy developing that tool as well. In early 2026, that will also be on market at no cost to the person on the street, to no cost for anybody that will be using it. So we are also charting new grounds, and our governor spoke about that. If you want your financial system to be truly inclusive, and you want your financial system to bring products and services to meet people where they are, you also have to create digital public infrastructure, of which the three critical pillars are digital identity, the fast payment solution, and then consent-based information sharing, so that financial institutions can harvest my data, my footprint, with my consent. And it doesn't matter whether I sit in the furthest northern part of Namibia, they can bring products and services to me that I need every day. So these are the roads, the bridges, and the railways of the modern economy. Without them, innovation cannot travel far. With them, inclusion can scale at an unprecedented level. And to this end, the bank has embarked on the gap analysis that the governor spoke about yesterday. And the insights gained will guide further development and the enablement of a national strategy that helps us to further accelerate the usage, adoption, and growth of having full-scale digital public infrastructure in Namibia. But all of that is not yet our most ambitious undertaking. I'm not boasting, please do not get me wrong. It's all about our people, the purpose, to empower, to grow. Our most ambitious endeavor, led under the able leadership of our Deputy Governor, Mr. Epson Wankuta, is set to launch in Q1 2026. In partnership with the National Payments Corporation of India, we are adapting what you all know as the Unified Payments Interface to address our fast payment solution gap in Namibia. This is not just about speed. It's about democratizing access to the digital economy. So imagine that farmer from the Zambezi region in northern Namibia receiving payment for their crops instantaneously without needing to travel for hours or lose money to high fees. Imagine young entrepreneurs being able to accept digital payments from customers anywhere in the country 24/7, or even internationally, without needing expensive point-of-sale systems, high fees and charges. Imagine government social grants being delivered instantaneously and securely to beneficiaries on the mobile phones in their hands, eliminating long queues and long hours of travel, and also minimizing the risk of cash distribution across Namibia for people to access these social grants that are vital in their daily survival. So this system will go live Q1 2026. And we have started with 7 use cases, and we will share that with anybody interested to further listen to our story. The system will also support QR code payments, voice-based transaction for those that can't read, and even offline functionality for areas with very poor connectivity. Most importantly, we heard about interoperability. The system will be interoperable from day one, ensuring that no matter what bank or what fintech you are using, you will be able to send and receive money. You will be able to cash out anywhere, or you can keep your money in a digital format. It will be up to you. But to achieve all of this, we as central bankers had to evolve ourselves. We had to take off the high heels, and that's why I'm in sneakers. We had to take off the coats. We had to forget about us being important or perceiving ourselves as important, and we had to come down to the level of our people. You've seen Ms. Schulz explaining. I can't do sign language, but she was explaining to us, if you speak and they don't understand, you are nowhere. So we had to take off all our serious facade, all our important facade. We had to come down to our people. We had to become ecosystem builders, leveraging the technology, opening the doors, opening the systems, and say to everyone, you are welcome. Whether you're a formal bank, whether you're a fintech, whether you're a rural farmer, whether you are a very young person with a bag full of dreams, you are all welcome. And we created that framework for our people to be included and not excluded. So, moving on with the story, what did we learn from everything that we've done? Okay. We realized technology will never be enough. The most advanced platform means little if people cannot trust it, understand it, or afford it. That is why every regulatory reform we are endeavoring upon must be smart in principle. It must be befitting unique realities of our people, their circumstances, matched with investment in financial literacy, in digital literacy, consumer protection, and also affordability. The poet was right. In sub-Saharan Africa, remittance cost is the highest in the world. Do not ask me why, but it is unacceptable. In the end, inclusion is never real until people can participate confidently, affordably, and safely. So that's the architecture that Namibia is building. Not just pipes and platforms, but a system rooted in trust, designed for dignity, built to serve every Namibian. The real measure of our success will not be in the policy documents or the systems launch. It will be in the lives that we are changing. Shuma from the Zambezi region today owns an electronic money account. She accessed that account by using a simple USSD phone, a Tamagotchi in our country. That's what we call those phones. When she sells the harvest, she's paid instantly. She can send money to where her children is schooling, to her relatives. She can purchase climate-resistant seeds and start the journey again. Soon, Chuma will be able to access microfinance and microinsurance to protect her household and even join the digital savings groups with other women in her community. Chuma's transformation would never have happened automatically because we built new systems. That would never have happened. It happened because we recognize that inclusion is all about the people we serve. It's not technology. We must meet the people where they are, as Ms. Schulz guided us today. We must speak their language. We must understand their realities, and we must build their confidence in the infrastructure that we are building for them, to them, designed for them, not for us. And this is why, in this year, we also launched the Financial Inclusion Awareness Campaign, supported by our literacy initiatives in all 14 regions, in all the languages in Namibia. This is not just about explaining how to use your service, but why it matters to save, why it matters to protect your livelihood, why it matters to grow your savings, why it matters that your finances should be safe, and why it matters why you should save for tomorrow. So the most inspiring of the entire journey was how our young people stepped forward. Every 2 years, the Bank of Namibia launches our high school competition, and it involves all high schools in Namibia. And we educate them both on the economy and the financial system, because that's what we are trying to do is to unlock their vision on possibilities. And some of the most powerful insights in how we can improve our financial system came from the high school students also. Through the STEAM program that we rolled out to schools in rural and remote Namibia to make sure we build fit for future skills, because our school's curriculum cannot get there. We have thus far educated 720 very young, bright minds that are currently using technology to solve the community problems. They do coding, robotics, and they are equipped with schools to navigate and shape a digital future with confidence. And we are not stopping there. We have learned from so many of you by engaging here at this global GPF. Through partnerships with yourselves, the universities in Namibia, we want to invest in the future of finance itself. That's why the Bank of Namibia also at our Namibia University of Science and Technology paid for the establishment of a robotics and artificial intelligence laboratory enabled a graduate program around degrees that enables emerging tech that assist our financial system. So yesterday, Governor said, yes, financial stability, monetary policy, that's our mandate. But if there's a development component that you can pull in, leverage it fully. And that's what we are trying to do. We also did something somehow out of the box. We developed what we call a youth simulation laboratory. And that's where the economists, the bankers, the financial markets, the regulators go out to the universities and have open dialogues, getting the views of the young academics in training on how we can further better the financial system so that it works for them. That's something else we've also done. Okay, so moving on with the journey. Empowerment requires more than access. It requires agencies. You can't do this alone. With your strategy insights on education, consumer protection, and accountability, if you combine them all, that your partners will give you, that your engagements will give you, you will be on the right path to build that ecosystem that you desire for your country. We have set the standards from fair treatment, transparent pricing, easy use, digital payment systems, everything. But we require our financial institutions to also provide information in local languages. So we're looking at supply side, we're looking at demand side. And we also have developed community feedback pipelines back to us, back to the financial system on things that are unpleasant, things that do not work. Make sure you address it, make sure it works for you. At the heart of true financial inclusion is truly the people. You quiet their voice, you quiet development, you quiet empowerment, and you quiet progress. So the ripple effect that we are seeing in Namibia is that by building an inclusive system, is that the benefits multiply far beyond what you ever could imagine. When we set it out to make our financial system more inclusive, we were focused on serving previously excluded populations. But what we discovered in the process is that inclusion makes the entire system stronger, more innovative, and more resilient. Our private sector has actively responded to this inclusivity approach, and they have come along with remarkable creativity and investment. So when we opened the payment systems to non-banks, service providers, we got more than just enabling services. We got innovation. Fintech companies began developing solutions that truly helps our underserved markets. So this transformation also strengthened our connections across the SADC region and the common monetary area we find ourselves in. And we were working closely with everyone to make sure that instant payments are deployed within our nations, are interoperable across borders, to make sure that accessibility is not just created nationally, but across the SADC region and the common monetary area. So imagine a future where a Namibian working anywhere in the world can get money instantaneously. Imagine a future where every child, wherever they code and develop, they are digital nomads and they can send the money wherever it's needed, any time of the day, 24/7 a day. We've heard about the Continental Free Trade Agreement. That agreement will not come to life if we are not deliberate in creating the solutions to bring it to life, and it will just remain a policy document. So by building an inclusive financial infrastructure nationally, regionally, continentally, we are positioning not just Namibia, but our entire countries, the entire continent, to be a global player that includes people, that creates opportunities, that empower, and that really helps us to prosper and grow. So moving to the end. How do you do this? I want to repeat. You take off your high heels, ladies. Gentlemen, you take off your office shoes. You take off your suits. You go out to the regions. You forget English and all other languages that are spoken. You speak to the person in front of you in a language they understand. Help them to understand why this is important. Help them to understand what we are trying to do. Then hear from them, truly listen to them, what it is that they need. And allow those two very wide bridges to connect at the central point of true inclusion. And do not write policies that don't speak to the people that you serve. Otherwise, you will miss the point. So if Namibia's story today is inspiring any of you, please talk to us further. We will share this journey. If you have stories that can further help us to learn, share it with us. We want to learn. Because at the end of the day, everything we do is about the people we serve. We thank you. Thank you. Thank you. It was a bit long.
Dr. Sarashia, Governor of the National Bank of Cambodia. Please take the stage.
Okay, Shane. Kom ons gaan agtertoe.
Ek trek hom net uit.
Is dit?
But first of all, I would like to thank AFI and the Central Bank of Namibia for the excellent organization of this event and a very warm hospitality. I sent photos of myself in one of the desert here, and my family has they have trouble connecting desert and winter clothes. So I told them, this is Namibia, this is out of this world. It's really a privilege to visit this country. It's going to be a tough act, follow DG Leonie, but I'm trying to share with you the financial inclusion in Cambodia through the backbone payment connectivity. But before I start, I have 2 videos to show you. Please play the video.
Hello, Puk. Suốt bài Puk.
Puk suốt bài đó con. Yên chắc, tôi đo ngày con là của người bố như là con ơi.
Cha Puk chấm con phía ơi.
Rồi chứ, tiết con ai nghe lùi mói.
Hello, Puk.
Con à, Puk tao đọt lùi này hả con?
Con mong toa tới sả ta mà con hay gì?
ជាមួយបាកងផ្ញើលុយតាមលេខទូរស័ព្ទផ្ទាល់មិនគិតថ្លៃសេវាងាយស្រួលសុវត្ថិភាពនិងមានប្រសិទ្ធភាពដាក់ដឹងដកប្រាក់ពេលណាក៏បានទីណាក៏បានទាញយកឥឡូវនេះ
Thank you. This is the second videos. We can, for technical, please go the second videos and I explain.
Ý đến thầy muốn.
Ok, Pư.
Con bị bạc đây chai lưới tam ní của bạn đây.
Scan QR code ជាមួយបាកងដើម្បីទូទាត់ប្រាក់គ្រប់ទីកន្លែងដោយសុវត្ថិភាពដាក់ដឹងដកប្រាក់ពេលណាក៏បានទីណាក៏បានងាយស្រួលសុវត្ថិភាពនិងមានប្រសិទ្ធភាពទាញយកឥឡូវនេះ
So let me explain to you the first video. Usually it is very expensive for migrant workers to send money home. And so they tend to save a lot of money because the more you send, the cheaper it becomes. And so they usually send in bulk to a family member, to either the mother, the father, or the husband, or the wife, to manage the fund for them. Some cases, the money got misused and it doesn't go to where it's supposed to go. For instance, here, paying the brother's school fee. This is based on a real story. This is based on my story. This is the story of the biological mother of my adopted son, who is going to be 8 soon. And it is very hard, especially if the women is a migrant workers, and for all of you who want to empower women, when we work so hard and we send money home, and the home just gone to waste. And so to be able to send money directly to the service provider, it is a big game changer for these women. It's empower them to manage their fund the way they want to see fit. They can send it directly to the home builder. They can send it directly to whoever they want to build and still stay a very filial daughter. The second story is about cashless payment. It's about ease and convenience. It's about making payment directly to the bank account of the seller. Now, regardless of which bank the seller is using, which bank the payer is using, they can still talk to each other. And when money is sent directly to a bank account, this is where the magic happens. Not only the seller can receive money directly to the bank account and save them from the trouble of bringing money to a bank and risk of being robbed along the way or receive counterfeit money, they can create a digital footprint with the bank they're using with. Now, this digital footprint shows the payment behavior of the seller. It shows how much cash flow on a daily basis or on a weekly basis or on a monthly basis, so that this seller can then ask for a loan from the bank. Now, usually the bank charge a very high interest rate on small ticket size loan because they don't know the customer. And when you don't know the customer, of course, the risk is higher, and when the risk is higher, you price it higher. Now, with this digital footprint, it allows banks to better know their customer, and therefore to allow and to create a credit line or a product that is more suitable to their customer, but it's also cheaper. This is a story that is happening in Cambodia, where many street side seller can now access to loans by just using their payment behavior as collateral. So how did we start this backbone payment system called Bakong? We started in 2016 at a time when we didn't have a RTGS system. The interbank clearing happened twice a day, and it's very inconvenient. So if you want to send money from one bank to another, there's only 2 times a day that it can settle. So imagine if you were to make payment to a KFC, you order your KFC, and it's right after a cutoff time, and you have to wait for the next day for you to be able to consume your chicken. That is not possible. And so we start to set up a working group to look into this, but also to create interoperability among the different players in Cambodia. We have banks, we have microfinance deposit-taking institutions, we have payment service provider, we have a specialized bank, we have leasing company, we have so many companies, and nobody talks to each other. Everyone exists in their own silo ecosystem. And then in 2019, we start the pilot launch of this. Now, I have to tell you, when we studied this in 2016 and 2017, we were exploring, it took us a long time, as you can see. We were not just exploring the business flow, the code of conduct, but we were also exploring the technology. In 2016, it was the time when Bitcoin was held as the future of money. And I am very open here. I am not a cryptocurrency believer. But when we used this product, we've decided that we're going to use distributed ledger. We use Hyperledger Iroha. So this is a form of blockchain technology. And so when we launched in 2019, we were sort of held as the first central bank digital currency in the world. And I kept saying, no, it is not a central bank digital currency. It is just a payment system. And I want to avoid going to all these big terms and attract unwanted attention, because even if it's a CBDC, the main purpose is just to make payment more efficient. And so we used this. I think we launched it, the pilot was launched on a real live, and the Central Bank of Bahamas was also launching their own CBDC, this time a real CBDC, a couple of weeks before us. And there was a debate which one of us launched first, and I said, well, since we're not launching CBDC, therefore Bahamas is the first country in the world. So no dispute there, we agreed on this. In 2020, finally we launched this interoperable payment system. So when we want to send money, it can now be done in real time, peer-to-peer. And because it's blockchain technology, it makes it very easy. To some point that Deputy Governor Leonie mentions about tier regulations and capital requirement. We regulate payment service provider as technology provider. We regulate microfinance as microfinance. And the stringency of the regulation of these regulations is a lot less than what we would regulate a commercial banks. Now, at that time, commercial banks are connected to the central clearinghouse at the central bank. But because they are commercial banks, they are required to maintain a certain level of liquidity management in order to participate. And so that will happen between banks. But if we want the payment service provider and the microfinance and the others institution to join, that would mean that we would need to require them to comply with the same level of stringency in terms of liquidity requirements. And that would then add on to the compliance cost for these institutions. And because they have more compliance costs, the cost would then pass on to the consumer. And it would beat all the purpose of trying to regulate them differently than the commercial bank in the first place. And so that wasn't something that would be workable for us. And this is why the peer-to-peer functionality of blockchain technology become very useful to us. I'm not going into the technicality of this, but if you're interested, I can explain it separately. And then in 2022, we start to launch the K8QR. This is a standardized QR code payment. You see, when we created the Bakong interoperability system, what it allows me to do is allow me to send money, so it's remittance, very easily to another person in the country, regardless of the banks or the payment service provider they're using. Now, I have to enter their name and then put my glasses on, the bank account, and if it's a 10 digits or 12 digits, you have to count it again. It's very complicated. And so we thought, why not use a QR code? Now, the functionality of QR code is that you scan the QR code and it auto-fill everything themselves. Isn't it magic? And so we started to look into this possibility because many banks have their own QR code. I have this fly who's attracted to me, I don't know why. So a lot of the banks have their own proprietary QR code, and they don't talk to each other. And that's how they want it to be, because they want to create their own customer base. And the bigger you can grow, and you become the winner at the expense of the smaller one. So we tell them, okay, you speak German, you speak English, you speak French, you speak Spanish, I don't care, now everyone speaks K8QR, which is the standardized QR code. And the things we did with them was that we tell them, you are going to discuss among yourself, there's a payment committee at the Bankers Associations, you are going to discuss among yourself which standard you want to use. Do you want to create your own standard, which is going to be very expensive? Or you want to use Visa standards? Because there are some banks that use Visa company standards, some use MasterCard standards, some use Union Pay standard, and some use other standard. And then we said, you're all going to discuss among yourself, and you tell us what you want to use. Because if you let me impose on you, I would impose something that is very dumb and very expensive for you to comply, because I don't know about this. And so they went and they discussed among themselves, and they agreed on a standard. I said, perfect. Now, a year from now, you all have to comply with this. And it was compulsory. It was not on a voluntary basis. It was compulsory. If they want to offer QR code payment to their customer, they have to follow this standard. And then the magic happened. Everyone used it. Now, the problem is, a victim of our own success, everyone now make payment with their QR code. There's less cash usage. And now the tourists are a pillar of economic growth. The tourists come and they say, how do we make payment here? I don't have a QR code. I don't have a bank account. Now, the funny thing is, we use card. You know, we're not out of this world. We also have card. But the POS card acceptance counts about 50,000 in the country versus 5 million QR code acceptance point throughout the country. It's a huge difference. And so for tourists, it's very difficult for them to go where they can make payment with their credit cards. And so what we did is we cooperate with Visa and MasterCard, and we say, we're going to launch an app called the Bakong Tourist app. They can enter their credit cards into this app and then make payment through the QR code. So it's just transforming their card into the QR. So this is not new. This is something that we borrow from Alipay and WeChat has done this. They've faced these difficulties before us, and they come up with a solution, and we just do the same. I don't think we need to reinvent the wheel. If something works, we'll just use it. And so we launched the Bakong Tourist app in 2024. Now, this is the four main motivations of Bakong. First is the address payment platform interoperability, as I mentioned to you, promote financial inclusion, 3, efficiencies in payment system, and the 4th is strengthen the use of our local currency. I'll go in depth into this a bit earlier. This is the image of payment before Bakong, where at a counter, you may have 10, 5, 6, 7 QR code from different banks and line up like this. And you have to go and look for which one fits yours. Now, this is not efficiency. So with this interoperability, we merge everything into one. Now, the merchant, they only need one QR code, regardless what bank, on one QR code. And Bakong will direct it to wherever bank they open their account with. This is beautiful. This is free of charge for payment. Second is promote financial inclusion, because when we introduce this interoperable platform, what happened is now the smaller banks who initially thought it would be useless for them to introduce internet banking or mobile banking because they won't be able to beat the bigger one because their infrastructure is already there, they have a huge customer base, no point for them to do it. Now with this interoperability, they realize that there are opportunities for them to also introduce mobile banking platform. And so they create this, and it allows now everyone to be able to open a bank account at just a click. This is something that I had a very interesting conversation with companies about card usage and QR code. To use card, you have to be able to ask for a credit line if it's a credit card. And if people are already excluded, there's no way they can get a credit line and get a credit card. And then you say, well, there is the prepaid card. Well, yes, if they don't have enough money, why would they put the small amount that they have in a prepaid card and get the cash to sit there without earning any interest for them? And so, yes, it's very convenient, but it's not efficient use of the little money that they have. And so the idea is to get them to open a bank account. And so with this QR payment, it is so much easier for them to open. First, they download the app, and I have to acknowledge that we are able to do this thanks to the infrastructure that our government has put in place in terms of internet access and the affordability of smartphone, because without these two base, we wouldn't be able to promote this kind of products. So they open their smartphone, download the app, they open the account, take a photo of themselves, take a photo of their ID card, and immediately we will send it to the database in our Ministry of Interior through a data exchange, a government data exchange, and then they will verify it immediately. If they don't have a credit card, mostly people in the rural area, they can do so and use a tier KYC, but the amount of cash or money they can spend or use will be a lot less. Now, this is really revolutionizing, and we see access throughout, because now imagine if you live in a rural area and you want to open a bank account. Without this technology, without this platform, you would have to ride 3 hours motorcycle to find a bank branch. You go to the bank branch, you open an account, and there's a document missing. So you ride 3 hours back. And then you have 3 hours again to come to the branch. By the time you get all your account opened, you're wasting a day of farming. And this is very costly for a farmer who earn their income on a day-to-day basis. Now, once you open the account, what do? Great, the money is in the account, and saving and interest, but now you want to use it. What do? You have to travel back to the branch, try to find an ATM and withdraw money. That's not going to happen. If I am a farmer, I'll just keep money at home, and I'll use it whenever I want to. With this capability, the farmer can now use their saving 24/7. They can scan and pay anywhere. They don't have to worry to ride a bicycle to a branch or find an ATM. They can just use this. And this really encourages people, low-income people, to go and open a bank account. During the 2021 COVID-19 lockdown, we have processed 13 million government-to-person emergency payment. This is logistically impossible without Bacom, but we were able to do this. Opening a bank account, receiving payment through the QR code directly to your bank account is also in itself a possibility to access credit, as I mentioned earlier. I'm not going to repeat this. Efficiency in the payment system. This used to be a time when people send money and they go to the agent banking and then withdraw cash. That's not what we want them to do, because people then just open an account to withdraw the cash, and there's no activity, and you realize that without activity, you can't build a digital footprint for banks to then know you better. So this is getting less and less. The agent banking is getting less and less because now people go to the bank account. They don't have to withdraw cash out. They can just leave it there and use it whenever they want to. It is the thing is they trust the system. It's safe. The money reach where it's supposed to reach. It's secured. Now, when people ask me, what about cybersecurity? Well, I said it's secured because we use blockchain technology, and I was told blockchain technology is now one of the safest technology out there, but who knows, right? Titanic sank on its first sail. So until then, it is considered safe. And it's also affordable. We'll make it cheap enough for people to send money. Actually, we cap the maximum fees that banks can charge. And below a certain amount, they have to make it free for the users. I mentioned to you about promoting the use of local currency. Cambodia is a very heavily dollarized economy. As you can see here on the chart, 85% of our foreign currency deposit to M2, 85% of our is in US dollar. So we want to promote the use of our local currency. And so to do that, we don't penalize those who use US dollar. Now, it's interesting, I have to mention here as well, is that the dollarization story of Cambodia is unlike any other country that you've seen, and that's because we have a very stable exchange rate for the past 25 years. It's not volatile like in any other story of dollarizations. It's almost fixed to the US dollar. We have very low inflation rate at 1.7 this July year on year, and yet people has not changed. It's more of a behavioral pattern. And so we, instead of penalizing those US dollar, we incentivize those who use local currency. So we start cross-border connectivity with different countries in the region and beyond. And we said, if you want to be able to go outside of the country and make payment through your QR code, you have to open a local currency account, because we turn off the US dollars account. US dollar account alone, you will not be able to make payment overseas. You have to open a local currency account, and people start opening local currency account. If you want the tourists from this country with whom we partner with be able to pay you directly from their QR code and make their payment experience easy, you have to accept local currency. And so now the merchants start to open local currency and accept local currency. And as a result, the number of transactions in blue, which is our KHR, our Khmer Real, has dramatically surpassed the usage of the US dollar. The result, as I mentioned earlier, is the widespread of acceptance. Here you see women, street vendors now accepting QR code. And this is a common sight in Cambodia. In 2024, Bakong processed 600 million transactions worth 147 billion US dollar. That is 3 times of our GDP. Can't beat that. Thank you. The number of transactions in KHR, this is in 2024. I'll show you the 2025, but you see it has increased and catch up quite rapidly with the number of transactions in US dollar. As of July, we have 70 Bakong members, 34 million account reach. We have a population of 17.5. So this is account reach. I don't say people, this is account reach. So assuming some people have 2 or 3 accounts. But overall, almost everyone have either a bank account or wallet account. And even those in the remote area, because if they want to receive government assistance, they need to have a bank account as well. And we have, as I said, 5 million KQR merchants. Oh, this is the number of the transactions in local currency, 50 million versus 40 million number of transactions in US dollar. Success factor is the critical designs. It's a single platform to create interoperability. We have insisted with the banks that we're not going to compete with them. And even if we were to compete and some of them will die along the way, that's because they're bad. Because imagine this. If you use a mobile service provider and your parent use a different mobile service provider and you can't call them, how inconvenient is this? And then now, either your parent has to switch to use your service provider or you switch to use your parent's service provider. Not good. But then the service provider that my parent use may not suit my need. I use more data than voice call. They use more voice call than data. So that is not something that is convenient. And so we explained to them that if you don't join, that means you're already a loser. If you join, then you can compete based on the quality of your service. Not just on interoperability, but on the quality of your service. Make it better, people will use you. Cost and efficiencies and speed is also a very big consideration. All of this discussed very intensively with the private sector. The second is the timely introduction. Why I say timely? Because we introduced this in 2020, the time of COVID-19. You can't do it better than us, right? COVID-19 was the lockdown. You don't want another lockdown. It was a time when nobody wanted to handle cash, right? It was supposed to be dirty. There's virus on it. We literally see in our country people cleaning their cash with soap and water and then hang it. No, it's no joke. I myself would spray alcohol on my cash. And it's a good test for our cashier department. I tell them if the printing goes with alcohol, you have bad printing house. You have to change your printers, your inks. And so with this timely introductions, I think it's really allowed people to embrace this in a much faster way than if we were to introduce this under normal time. And 3 is private sector, government-led, but private sector inclusive. When we start this, we didn't start alone. We bring the private sector in, we say, let's do this together. This is the objective I want to achieve. Tell me what you think. And of course, the bigger one would say, oh yeah, but how about us? I say, well, let's discuss this. And so from the very early on, they are in this together. They help us design the business flow because we don't do business. We are central bankers. I never run a bank in my life, so I let them tell us what they want. They decide on the pricing structure. We said, if you want people to adopt it fast, you can't go with the model of interchange fees and all these fees. I said, I don't even understand how this works. How do you expect somebody who is illiterate to understand the interchange fees? If that's the case, nobody would be a merchant of your things. And so we eliminate all this, and we make it very simple for people to adopt. These are the countries that we are now on the top countries that we have already connected with, to Thailand, Laos, Vietnam, UnionPay, Japan, Malaysia. We also connect with Alipay Plus, and through UnionPay, we're also able to connect to WeChat. So that means our citizen can now go to China and elsewhere and access hundreds and hundreds of millions of merchant points. This is really beautiful. And we're now in the process of working with India. India is already something that passed a certain stage. It's just the pricing structure we need to finalize. Singapore, and then the Philippines. It's an example of cross-border payment, how with Bakong it is able to reduce the remittance fees for migrant workers to send money home. Now, ladies and gentlemen, we are living in a moment of extraordinary possibility, and with foresight and determinations, I believe emerging economies can shape financial systems that are more resilient, more inclusive, and more attuned to the needs of today's citizens and tomorrow's markets. I am honored to be here, and as the Finance Minister of Namibia mentioned yesterday, this is not a gathering, this is a movement. And Cambodia is proud to walk this path alongside you. Thank you very much.
As Ms. Maha Baho takes the stage, I will make a short announcement. We have participants departing today at 1 o'clock from the Walvis Bay Airport. Please make your way to the buses. We don't want you to miss your flight. Thank you.
Good morning. You can hear me, but can you see me? I need the assistance of the governor of Salvador. So, good morning again, distinguished colleagues, honorable governors and deputies, and dear friends. Special good morning to Bank of Namibia and AFI for this opportunity to bring us here today to share knowledge, to share experiences, and to learn from each other, and for the great hospitality. It's an honor to be here today with you and to share the story and journey of Jordan in its digital financial transformation. For us, financial inclusion has always been about people, the unseen people, the underserved. I mean, a woman that is running a home-based business in a very remote area, or a young graduate in the capital city of Amman who's launching his startup, or a refugee who is looking for a decent, safe, and transactions with dignity. The story in Jordan started with a strategy led by the Central Bank of Jordan, who focused on a strategy and who focused on real and accurate investments and on collaboration across different institutions. But I will take you back. Namibia took us to the future. Now I will take you back almost 12 years to 2013 to look at the picture. At that time, financial inclusion in Jordan was only 24% of the adults. That was very little. And most of the transactions were cash-based. In 2013, the transactions that were conducted digitally were below 3%. Definitely transacting in cash would left most of the people excluded and behind. And we were talking, me and Mai, about how payments would really drive financial inclusion. Before telling you what's the landscape now, I missed to tell you that I was inspired with Dr. Shirley from Cambodia. Many of people here in AFI, they know me over the last 10 years. And I look to them as a very strong, active woman that would hardly believe that I was manipulated or abused. Believe me, in 2010 and 11, I moved as a secondment to Libya for 1 year. I wanted to make money because working for central banks, maybe in most of the countries, we are less paid, underpaid. So I moved to Libya. That's the case in Jordan. Yeah. I left the Central Bank of Jordan after 30 years with accumulated debts. So, but financially included. So I moved to Libya to work for a year. I wanted really to secure the future of my 2 kids. So I went back after a year to find my ex really secured his future, not the kids. And if we want to use the promotion of financial inclusion the way it is in Cambodia, males in my country, according to the social norms, they have edge and say over females. So they will never allow us to have a bank account or digital financial access. So if we look at the landscape of Jordan in 2024, almost after a decade, the landscape looks completely different. Now, the financial inclusion, after 10 years, according to Findex of 2024, it's almost double. 47% of the adults have access to financial services, with almost 50% of the adults use instant payment systems. This progress could not have been done overnight. It required, as I mentioned, strategy, it required collaboration, and it required right investments. The journey really started by the Central Bank of Jordan's first digital payments transformation strategy that took place in 2013 till 2016, in 4 years. Believe me, we did a lot over 4 years because we were determined, we were focused, and that's what we wanted to achieve. We started, after a year, we need the planning, we need RFPs, we need bidding, tendering. We started by micropayment systems. We started by Jomo Pay, Jordan Mobile Payment Switch, because we wanted to reach people wherever they reside. We don't want them to burden to go to the financial institutions, so the Central Bank of Jordan allowed for the first time the non-bank financial institutions to hold like deposits within mobile wallets and to allow them to transact. And for the first time, these people started to receive their wages, social benefits, cash allowances, or humanitarian assistance, or salaries digitally. They were able to save and to transact digitally. In parallel, the same year, we were working on a centralized platform for bill presentment and payment system. And as we all know, the largest single payer in any economy, the largest single payer and payee, the government. Maybe they are payee more than payer. So we needed to integrate all government entities for all digital or electronic services, so they are paid digitally, and people can pay all their utilities, claims, universities, schools, name it, even insurance, whatever you say, using this system. So the mobile payment system, which was instant, and the electronic bill presentment, e-Tircom, also instant, these two systems help people to have more flexibility, more freedom, more control over their money. It helped to increase financial inclusion and to reduce the gap because it serves women. I don't need now the permission of my great husband, Alec, to go to the bank to open an account. I can open it using my mobile, and I can transact and I can save digitally. So without the advertising, now we overcame this problem. Definitely, we needed a robust infrastructure. The first RTGS in Jordan was launched in 2001. And we needed to replace that. Because of the vision we had, we wanted a robust highway to allow the settlement of all types of digital payments in central bank money. So we replaced it with a new system with robust capabilities following the latest ISO standard 222. I know that you are all suffering from the implementation of the new ISO. We implemented it 10 years before the deadline of the new mandate. And we launched the first automated clearinghouse in the kingdom, also following the same ISO 222. We wanted in both credit transfer and direct debit. This was created really to create an efficient interbank payment system. So we started by the micropayments, the bill presentment, the highway, now the ACH over it, so the digital infrastructure to allow that. Unfortunately, the usage was still low or below the aspiration of Jordan. So we started to investigate. We conducted market assessment and impact assessment. And we found that both individuals and businesses, they are seeking or hoping to have more convenient payment systems, faster payment systems, more interoperability among all payment systems. By that time, Central Bank of Jordan has decided to spin off the operation of retail and micropayment systems, which I totally agree with, not to become the CEO of JOPAC, although it was good. It came with the package. Because Central Bank believes I'm a regulator, policymaker, overseer. I need to focus on my core functionality or core mandate. I'm not a payment service provider. I am not a payment system operator. So the central bank, with the whole banking community, they created JOPAC as a public-private partnership to give us the agility, the more freedom to move within the market with a clear mandate of operating digital payments and digital financial services. So it was established, and we started responding to the market's needs of more efficient, faster payments. So we created what we call now, and we're proud of, CLIC. CLIC, it's our robust instant payment system in the country. But what happened also? What happened? The pandemic. The pandemic accelerated everything, so I was in front of the board, look what happened with the digital payments after I became the CEO of JOPAC. Although we all know that it was the pandemic, but I requested bonus for that. To compensate what my ex took from me. So everything became full interoperable. All systems became operating all together. So people now, they don't need to cash out. People, they don't need ATM cash out or any agent cash out. We created a huge digital liquidity where no transactional costs are associated with our transactions. So that was excellent. We discussed with the central bank the huge reduction in banknotes issuance, processing, handling, maintenance, destruction, and with all banks, the cost of maintaining ATM and the transferring the cash to disperse the ATMs, etc. So the whole ecosystem worked, and it happened contactless of cards. We upgraded Jomo Pay to become also according to ISO 222. The Central Bank of Jordan were very extremely wise. They mandated all banks to integrate and to launch Click. They mandated all banks to provide the latest ISO and non-banks. And what else did they took? A very decisive step by allowing digital onboarding. At that time, JOPAC, within our API gateway, we integrated with all federal agencies to validate the identity of people, if they are citizens, nationals, or expats, or refugees, and now we're working on legal entities as well. So this was a step towards full eKYC, but we enabled full validation because of the limited mobility of people during the pandemic. So Central Bank of Jordan allowed that. This left us with what? Look at the numbers now. 75% of the GDP flows through instant payment systems. Instantly, which serves the digital economy and the economic growth because of the velocity of money, of the almost zero transaction costs. So instantly, Click, Jomo Pay, and the electronic bill presentment and payment, 75% of GDP flows through instant payment systems. If we look at all digital payment systems to include cards, because cards are not instant, if we include the ACH for wages and other EFTs and other systems, it's about 250% of the GDP flows through digital payment systems in Jordan. We couldn't stop there. With the vision of the Central Bank of Jordan, because we became like an executive arm for the digital objectives of the Central Bank of Jordan, with our agility as a public-private partnership, they found that this huge digital infrastructure, and here I am to talk about digital infrastructure, we have to capitalize on it. We have to leverage, we have to benefit. How? By allowing innovators, entrepreneurs to use these, to capitalize with innovative financial technology over our digital rails. So we officially launched Join Fincubator. And I'm happy to tell you, Join, it's not just join as a request, action of request. It's J-O, Jordan, I-N, innovation. So Join Fincubator, even it was inaugurated by Crown Prince, it became one of the most important players in the entrepreneurial ecosystem and economy in the country. We finished 2 rounds of incubation programs. They graduated with extremely promising fintech ideas, moved from ideation stage to MVP. And those who requires kind of regulation, we bridge with the regulatory sandbox with the Central Bank of Jordan and with other fintech accelerators, so we try to provide the whole ecosystem. We served a huge number of MSMEs. We even launched hackathons for green fintech. We launched different hackathons that are tackling challenges that the country is facing. And it was really, we're so proud of it. It's an amazing how we're working with the whole ecosystem to enable startups and entrepreneurs. So this I mentioned before, I was so happy about it. And in Jordan, the QR. We built as well a standard QR that is full interoperable. It's dynamic. In Jordan, Central Bank of Jordan does not allow static. It's dynamic. So every single time you would transact, depending on the amount, the date, the timestamp, everything, it will generate for you a dynamic, safe QR. So you can transact regardless of where you hold your money or the payment acceptor. Another thing, our QR payments is push payments. So the payment acceptor requests me to pay this amount, and I push it. So I control the money. That's why I will knock on woods. After 5.5 years of using this system, 0 fraud transaction. We control it, and every time I get a phone from companies promoting their fraud detection and prevention system, I say, I will not tell you the truth, but we don't need it. This comes, the numbers, with huge investment in financial literacy and awareness campaign. We conducted financial diary. We visited refugees in their camps. We listened to their needs. We tried to create, I'm not talking, it's not talks, it's really action. What I'm telling you genuinely happened in Jordan. We discussed with people, whether youth or female or refugees, what they exactly need. We conducted digital experiments before providing or launching the service, or like updating or adopting the service to test if it really serves their needs. So the campaigns, the digital experiments gave us these statistics. And the statistics are not like silent numbers. Behind every statistic, there's a human story. A story of a home-based woman baker who used to accept payments in cash. Now she can accept digitally to her wallets or bank accounts, so the financial service provider can see her cash flow. Not only safety, access to credit facilities. She becomes more eligible for bank loans. For a taxi driver who used to take the risky cash and stack of cash, so anyone could really abuse him to steal his money. Now he accepts digitally. To the refugee who can save for his unforeseen future, who can carry on his future, his financial history to any country and become eligible for formal financial services. We will not stop here. Our ambition is really huge. We're working now with the Central Bank of Jordan to launch. We already have pilot with 2 banks, the financial digital identity, with the digital signature as a trust party, the Central Bank of Jordan, where people not only can onboard for opening account, they can have insurance policy and sign it. They can have any loans. So this is like a foundational for even future innovation. Click Plus, we are working on opening Click for cross-border remittances. We already launched this system by the request of Central Bank of Jordan, only the first phase for inward payments to serve the refugees and the expats. Open Finance, Central Bank of Jordan made a huge and amazing step by mandating open finance, but it left it to the industry to decide the specs of the APIs. And there's a huge task force from experts from Central Bank of Jordan, JOPAC, and the banks in the country. This one is a new, but it might look weird for you, but I would love to share this with you. We're working with the Ministry of Justice to connect all courts with the banks. How does it serve financial inclusion? For inheritances cases, so many of those who might inherit their deceased, they don't have a bank account, so this will create more financial inclusion for these vulnerable people, especially those who are around the age of 18, 20, still not working, so still they don't have the youth bank account. For divorced women, I know the case exactly. She needs to make sure that she's receiving the alimony by the verdict of the court to the right account, so this will be fully integrated, in addition to other cases like freezing assets, unfreezing assets. So we're working with the Ministry of Justice. We started last month, and hopefully in 6 to 8 months, this will be up and running. The other one, LGs. For MSMEs in Jordan, anything would require them to issue letter of guarantee from their bank. The process is like fatal, high cost, and no one would trust them, so they would require a letter of guarantees. And the management of the letter of guarantees, we built something wow, standard, and now we're testing it with the Central Bank of Jordan and 4 banks as a pilot within the digital regulatory sandbox to make sure that it covers everything, and we are supposed to launch it soon. This serves all types of legal entities, but mainly MSMEs. The closing remarks, which is like very heartfelt. I will not make it long, but just one single word. Jordan's journey in transformations is a very evident and clear evidence that small countries with very limited resources still can achieve a lot. And we can learn from large companies, and we can even do much better than what they do. Don't let anyone limit your capacity or your potential capabilities of serving all, because financial inclusion is not a privilege. It's a right like any other human right. Thank you very much. One last comment. Jordan is always open as a second home for anyone who would like to see our journey or who would like to check the model of JOPAC and the partnership. Believe me, it's an amazing concept where the central bank doesn't have 50% or over, so the private sector has the agility, and the central bank has full right to spin over later on for more of the technology or other financial service providers. Thank you again.